Penny stocks. They sound enticing, don't they? The allure of buying shares for just a few cents, dreaming of hitting it big overnight. But let's talk about the dark side of penny stocks, because the reality is around 90% of investors lose money in this space. First off, penny stocks are typically defined as shares that trade for less than $5. They're often associated with small, obscure companies that are struggling to gain traction. This means they lack the stability and credibility of larger, more established firms. When you invest in these stocks, you're often betting on a company that may not even have a solid business model or a clear path to profitability. One of the biggest issues with penny stocks is the lack of regulation. Many of these companies are not required to file with the SEC, which means they can operate in the shadows. This opens the door for fraud and manipulation. You might hear about a stock that's about to explode, only to find out it's a pump and dump scheme. In these cases, promoters hype up the stock to drive up the price, only to sell off their shares and leave unsuspecting investors holding the bag. Another factor is liquidity. Penny stocks often have low trading volumes, which means it can be hard to sell your shares once you own them. Imagine trying to sell a stock that nobody wants to buy. You might end up selling at a loss, or worse, being stuck with it indefinitely. Then there's volatility. Penny stocks can swing wildly in price, sometimes moving 20% or more in a single day. While this can create opportunities for quick profits, it also increases the risk of significant losses. If you're not careful, you could find yourself in a downward spiral, watching your investment evaporate before your eyes. And let's not forget about the emotional toll. The thrill of chasing after a penny stock can lead to impulsive decisions. You might find yourself glued to your screen, obsessively checking prices and making trades based on fear or greed rather than sound analysis. This emotional roller coaster can cloud your judgment and lead to poor investment choices. So, what's the takeaway? While the idea of penny stocks can be tempting, it's crucial to approach them with caution. Do your research, understand the risks, and consider whether you're willing to lose your investment. Remember, the promise of quick riches often comes with a hefty price tag. Investing should be about building wealth over time, not chasing after the next big thing that could leave you in the dust.